Hello, welcome to the midweek trading day. Hope the trades are working for you so far this week. Well, let's get to the top stories I set to agenda now. Let's start with our biggest forex earner. We're seeing oil prices, they steadied today after falling in the previous session as investors watch for fresh developments in the Ukraine war and weighted hefty new U.S. tariffs on India. That's the world's third biggest crude consumer. So that weakness we saw yesterday, that's continuing today, starting off, but marginal drops there, about 7 basis points. That's for Brent crude, $67.17 a barrel. Then we see WTI moving further away from the $64 per barrel level, and it's down about 9 basis points. And definitely we see both contracts there down almost 2% yesterday. Big drops yesterday there from the 2-week highs that we saw before now. But let's get to our first conversation now. We see Nigeria's oil and gas industry is at an important inflection point after years of battling declining output, oil theft, underinvestment. Recent developments are reshaping the narrative. The Nigerian National Petroleum Company Limited has declared pipeline theft nearly eliminated, creating new optimism that production could rise above 2.5 million barrels per day. At the same time, reforms under the Petroleum Industry Act and new cost efficiency orders are beginning to attract investor interest. Against this backdrop, President Bola Tinubu recently announced that Petrobras, the Brazilian state oil company, which exited Nigeria 5 years ago, may be returning swiftly as a deep water partner. Well, let's talk to Chinan Dekwa now, as the Vice Chair, African Energy Council. Great to have you on the show. Good morning. Good morning, Chinan.
Hi, Laddie. Good to see you again.
Fantastic. Yeah, it's been a while. Great to see you again.
Pleasure to be here, Laddie.
Great to see you again, Chinan. So, a lot has been happening in Nigeria's oil and gas industry this year. It seems like, we keep hearing good news, at this point. But how would you assess the current state of, Nigeria's oil and gas industry, given recent reports of improved security and stronger local participation?
Yeah. Laddie, I've said this before, and I think even on this program here, there's no doubt that we're witnessing some big shifts within the Nigerian oil and gas industry, and it's across the board. There's no denying that at all. We're seeing, I think yesterday, actually, new data coming out showing rig count is increasing. Now, rig count, just for people to understand, that's one of the indicators of new activity picking up in the Nigerian oil and gas system. So that's going up, which is a great sign. Number two, you just mentioned Petrobras, people who exited before 5 years ago. Petrobras left Nigeria. The same block with Sapetro, CNOC, and a couple of other companies now looking potentially to come back because of a lot of the executive orders that President Bola Tinubu signed, the cost efficiency. So the almost comatose Niger Delta Basin, which had very little life in it, is starting to kick back and come alive again, which is very exciting.
So do you think the recent production gains are sustainable? We did get the one for July, that's from the NUPRC, about 1.7 million barrels per day. Do you think this is sustainable? Are they fragile, given global oil dynamics and, local challenges? Do you see this continuing into the second half of 2025? We see our oil production up and up.
Yeah, Laddie, I will answer that question by just taking us back to where we were before. At the start of this year, we were 1.1 million barrels per day. I think at the start of this year, we have gone up very significantly. So the trajectory and momentum is definitely behind us. There's no question about that. And we're seeing a lot of this continuing. Now, our target for this year is 2 million barrels, I think 2.06 million barrels per day. Can we hit that? I think that's the big question. I am optimistic, but honestly, I think there's still quite a lot of headwinds to get there. But there are a few things that are great and for us to look out for. One, Nigeria is hitting its OPEC quota, the short-term quota that's been set for us. That's very exciting. The cost efficiency order is generating a lot of buzz in the oil and gas industry. People are starting to come in, in a big way. Number two, Laddie, something which you and I have been speaking about here for many years, oil theft. Oil theft is probably at its lowest that we have seen in a long time. So a lot of the barrels that leave the wellhead of most of the fields actually end up getting into the terminal, barged and taken off onto the market. And a lot of those successes, I've got to say, I'm going to pause here to talk about that because it's very important. A lot of these successes have been the model of bringing the community into operations, getting the community to take an equal stake in the policing of this, because we've been trying to solve this for a long time. It never worked with the Navy, it never worked with special operations. The new model, which brings community and brings them into operations, seems to be working quite a lot, and that's tied into the PIA as well. So without doubt, you asked me the question, is this sustainable? I think the momentum is behind us, and that's something to be very optimistic about. Are we there, and can we get to 2 million barrels per day for this year? I'm not entirely convinced that we will be, but I think maybe 2026 we can hit 2 million barrels from what we can see from data.
Right, and definitely getting more barrels out of the ground and selling more barrels, that means more revenue for the government. But how can we translate this to the man on the street actually feeling this impact? How can we translate this to going to a filling station and getting fuel for maybe 500 naira per liter or less?
Yeah, so that's a really important question that you asked there, Ladi. No question. In oil and gas, we can see the chefs. But I play this game every time I'm in a taxi in Abuja or Lagos. I have a conversation with a taxi driver just to understand, how he's perceiving it. It's true that the gains are yet to translate to the ordinary people, without a doubt. Food inflation still very high, cost of transportation, petrol, PMS, diesel, still relatively high, and several other indices. But you would imagine that a lot of the reforms that happen starts from the top and it trickles down progressively, as you'd see. But one notable thing I think that can really shift the dial in the short term, Ladi, is the fact that we're starting to have transportation from Dangote, transportation of PMS products from Dangote, straight from the refinery gate, using 4,000 trucks all the way to depots near the people. What does that do? That ultimately reduces the cost of PMS and products. Why? Because it cuts down the several layers of middlemen that we have. So, Ladi, think about this. When you take the current model that we have, people take crude oil, let's say from Mosimi in Lagos or one of the depots in Lagos. The middleman takes it to his own depots first, and then transports it. In each of those layers that the middlemen are operating, they put a margin on there. 20 naira, 15 naira. That margin ultimately gets sent back to the people. So people buy, PMS at a higher price. Today, with what Dangote is doing, that would cut down that margin and potentially translate to people. So if that happens, Ladi, and that gain gets translated to people, inflation will be curbed. It will be curbed. Transportation costs should come down. Food inflation should come down, and should translate to a direct benefit to the people in a very short space of time.
Yeah, we'd definitely like to see the direct benefit. Then we see the Brazilian state-owned oil company, Petrobras. They left Nigeria around 2018, citing operational and strategic, challenges and the prospects they'll be making a return at this point. How big of a deal is this?
It's a huge shift. It's a huge shift. I mean, you look at the oil and gas industry today, Petrobras is one of the, highly respected NOC, IOC types because, it's sort of a hybrid. It's one of those companies that is well respected. It exited Nigeria at the time where we had lots of structural issues. There was lots of cloud around the PIA. The regulatory framework was not very clear. Lots of players at the time were exiting as well. CNOC exited and several people. And the block in which Petrobras was in at the time was a very lucrative block. South Atlantic Petroleum were there. CNOC was there. Obviously Petrobras and a couple of people. And Total, I think. But they left that block at that prime time because of regulatory issues. Today, Ladi, those regulatory issues, most of them have been solved. The PIA has brought the necessary clarity that we want. And beyond that, with the new executive order, 3 new executive orders, the cost efficiency executive order, which is tied to, how efficient your production is, that President Bola Ahmed Tinubu has signed, that is bringing renewed confidence. There's also the contracting framework, which cuts down contracting to 6 months, another executive order, which means that in 6 months, every contracting has to be finalized. That again cuts out bureaucracy and is giving investor confidence. These things are hugely significant, and I think are some of the things that are driving new players to look at the Niger Delta Basin. And I think Petrobras, if you ask me, is potentially going to be one of many to return. We've seen exits by, in some cases, ExxonMobil. We've seen exits by, Shell. In some areas, we've seen exits by Total. The Niger Delta Basin is hugely productive, and I think the new regulatory framework gives confidence for them to start to come back.
And talking about coming back at this point, what opportunities could Petrobras, their re-entry, what could that unlock for Nigeria's deep water oil sector?
Yeah, so I think there are a couple of things to look out for there. In the deep water, which is where the our huge prices are today, lots of them obviously joint ventures there. I think there are a couple of things that we should look out for. The opportunities, I think, is one, the biggest one, if you ask me, is the opportunity to re-enter and try to drop the unit cost of production. Nigeria's unit cost of production, if you look at it today, based on what NUPRC are saying, is between $25 per barrel and $48 per barrel. These are the official numbers that NUPRC says. So the $48 per barrel mark, that's sort of at the offshore level, deep offshore level. Petrobras can come in with this huge digitalization framework, is huge expertise in drilling of deep water fields. So just for context, some of the deepest fields in the world today are in Brazil. So when you look at the pre-salt basin around the Santos Basin in Brazil, some of the deepest fields today, we're talking 3,000 meters of water depth, drilled there below from the seabed up to 10 kilometers down. So they have huge expertise there to bring into Nigeria's deep water. They have huge expertise in curbing the cost of production, unit cost of production. All of these are the things that they can bring into new developments to help Nigeria become more cost efficient. And more cost efficiency, of course, means more revenue for the country, and also more expertise and knowledge transfer that we can take and weaponize. So I think these are the key opportunities that we should look out for in the short term.
All right, so, definitely great news, more barrels, coming out of the ground and, selling more barrels. Well, thank you so much, Chinan Dickwal. He's the Vice Chair, African Energy Council. Thank you so much for helping us unpack what's playing out in Nigeria's oil and gas industry. We'll try and get on that conversation some other time. But let's get a check on other stories now. At this point, we see the Central Bank of Nigeria set a firm October 31st deadline for all payment companies to migrate to the global ISO 222 messaging standard. This applies to banks, mobile money operators, payment solution providers, and all licensed operators across the country. The CBN says this move will standardize payment data and bring Nigeria in line with international best practices. The Apex Bank has warned that compliance is not optional. Firms must complete migration and implement mandatory geotagging of payment terminals or face sanctions. And we also see the Debt Management Office says it's raised 136 billion naira from the federal government's bond auction in August 2025. The sale featured a new 5-year bond and reopened 7-year bond each with an offer size of 100 billion naira. The 5-year bond got 70 bids worth about 102 billion naira, with 46 billion allotted at 17%. And we see the 7-year bond got stronger demand there, about 111 bids. Meanwhile, the August total is lower than July's auction, where 185.9 billion naira was allotted. Some other stories now. The Lagos Chamber of Commerce and Industry has held its LCCI International Business Conference and Expo themed Invest Nigeria, with participation by representatives of 15 different countries around the world. The president of the LCCI, Mr. Gabriel Idahosa, believes the gathering will herald more partnerships for economic development. Take a listen.
The arrival of the Minister of State for Trade, Senator John Eno, who is representing President Bola Tinubu, signals the opening of the event. He's joined by the Minister of Regional Development, Engineer Abubakar Momo. Already, captains of industries from different countries around the world, ministers and representatives of ministries, states representatives and diplomats are all set to discuss Invest Nigeria. The chief host, the president of LCCI, Gabriel Idahosa, sets the tone.
Nigeria boasts one of the world's youngest and most dynamic populations. By 2030, we will be among the top 5 most populous countries with a median age of under 20 years. This is a vast labor force in massive consumer markets at an innovation hub, not only in terms of waiting to exponentially grow.
Participants then enumerate challenges and opportunities which seem to be equal in the country.
We face enormous unmet barriers. But for investors, these unmet needs are not barriers. They are business opportunities waiting to be unlocked.
We also must continue to focus on sustaining our reforms. So today we've established macroeconomic stability, but stability is not the destination. Stability is just the beginning.
Then a message from President Bola Tinubu.
We have taken decisive and tangible steps to prove our resolve. Through the Presidential Enabling Business Environment Council, PEBEC, we have implemented over 180 concrete reforms, streamlining processes and dismantling bottlenecks that have stifled growth for years. We have digitized and automated procedures, reducing the time and the cost of starting and running a business in Nigeria. We're not just aiming for incremental improvements, we are rewiring the very architecture of government to serve the needs of the business community.
The third edition of LCCI's Expo continues for 2 days, giving an opportunity for new partnerships to be formed and old ones strengthened.
All right, now we shine light on a financing approach that is steadily reshaping how businesses operate across Africa. That's leasing. In an environment of rising interest rates, restricted credit access, and the pressing need for sustainable expansion, more companies are turning to innovative and flexible ways to secure the assets that drive growth. The theme now is driving sustainable capital strategies, why leasing represents the future of business finance in Africa. We'll unpack how leasing enables businesses preserve cash, remain competitive in a rapidly evolving marketplace, and scale with resilience. Joining us to unpack the opportunities and challenges and future outlook of this critical sector is Ebei Ehiemoike. He's the Managing Director of Lekan Finance Company of Nigeria, a subsidiary of the Bank of Industry. That's Leasing Company of Nigeria. Great to have you on the show. Good morning.
Good morning. It's great to be here.
Fantastic. So, as Nigeria's pioneer leasing institution, how is Lekan Finance Company shaping the future of assets, access and business growth? We know most companies they struggle with having to acquire some of these assets that they need for their business because they're really very expensive.
Thank you. Now, Lekan Finance Company Limited is redefining how Nigerian businesses access productive assets by making leasing a practical, affordable, and very sustainable financing solution. Now, we combine deep sector knowledge, pure sector knowledge, and our impact mandate to bridge the gap between businesses and the equipment that they need. The truth is, the future is asset light. And a smart lease would always turn an idle idea into a very productive enterprise. Now, our leasing model empowers businesses to acquire essential assets without the burden of upfront capital or long-term debt. And what that means is that it properly positions the businesses, our clients' businesses, to scale up very quickly in a sustainable manner. And that also flows from our clear, deep sector knowledge. Lekan is the oldest leasing company in Nigeria. And we've gathered a lot of experience over the years and have created a niche in the market. It's also a plus for us being a subsidiary of the Bank of Industry because we have the added advantage of being able to offer facilities at very competitive rates that are unmatched by commercial banks. We also have the edge of tenure. We also offer longer tenures than other lenders can offer, largely free from our source of funds and our cost of funds. Because we have deep sector knowledge, we also offer bespoke product offerings to our customers. These are offerings that are aligned to the needs of each of the sectors of these customers. And we also offer flexible finance. What's critical is ensuring that the customers get products, facilities that are given to them that would align with their cash flow. What that means is that we are an active partner in helping this, a strategic growth partner, really, in helping our customers scale up from being little micro enterprises to being large enterprises.
And, definitely in a high inflation, that's high interest rate environment, definitely, and, that's to, battle inflation. We've seen central bankers, globally try to, raise inflation. Some are winning battles, some are not at this point. And talking about lenders, what unique value does LECON bring to the market, compared to commercial lenders? Because they have to charge a lot, to lend money to businesses.
Okay, now what we bring to the market, different from traditional lenders, is practical flexibility as a leasing partner. Now, the essence of a lease. The beauty of a lease is a smart lease turns an idle idea into a productive enterprise. Now, because what we are bringing are best products aligned to what the customers need, purely tailored leasing structures. Now, what we do is, apart from giving all those benefits that I had earlier mentioned, as a matter of fact, I think some of our customers would actually say that our greatest niche would be the interest rates. Because right now, the lending rate in the market vacillates between 25 to about 30%. And that will be on interest rates, not even the fees. And you really can't blame those lenders because it flows from their source of funds and their cost of funds. Now, we also provide that flexible, practical flexibility, as I had earlier mentioned, because apart from the rates, we also help customers manage their cash flow needs. The beauty of a lease, as opposed to a credit, is that the lease allows you go away from the traditional lending model of you taking in your cash and putting it all in to buy an asset. It ensures that the asset doesn't, even in most cases, sit on your book. So you have tax benefits from that asset. The asset sits elsewhere. We manage your risk. We manage the challenges you have. The customers would not have to come in and put in a lot of capital. Capital as in like the equity contribution. Our lease also offers flexibility concerning collateral, because the lease itself is the main collateral, is the main security for that facility. And because what a lease is structured around assets, that's largely what we finance, assets. Now, because of assets are productive assets, what that means is you also have a clear way out of the payment of those, of the lease, because the assets actually ensure that the facility is paid down. So in essence, it takes the financial capital pressures off the customer. The customer has a cash flow to run their operations. The customer has assets that they do not necessarily need to keep at the end of that tenure. They have access to top-notch assets. What that means is, because the innovation circles right now is quite short, if there's a better technology that comes up along the line, the customer has the flexibility of, at the end of the lease period, not keeping those assets, but buying, moving another lease into the more current assets. What that means is they're not tying down their capital. All in all, it's a fantastic deal for the customer, because the customer moves away from the traditional model of doing business and moves clearly into a fast-paced way of doing business, a partnership, a strategic collaborative partnership that ensures that their business scales up ultimately. And at the end of the day, it also trickles back into the nation. It helps the nation and really stabilizes things all around.
All right, so let's imagine, I'm a business now. I'm in the printing industry, and I'm trying to buy this massive, printing machine that costs about maybe 50 million or more. So I come to you now and I say, I want to buy this equipment, but I don't have the capital, so I'm going to lease it. How does it work?
So there are two basic types of leases. There's an operating lease and there's a finance lease. We also have some other lease variants, like a leveraged lease, a synthetic lease, and a sale and lease back. Now, So typically how this would work is we would offer you either an operating lease or a finance lease, depending on what you ultimately desire or require. If you intend to, at the end of the lease process, own that asset, it will be a finance lease. If you don't intend to own that asset, it will be an operating lease. Now, if it's a finance lease, it means that at the end of the tenure of the facility, which would run typically from about 4 years, 5 years, the product eventually becomes yours. But even then, until then, we help you manage the risk aspect concerning depreciation, so it won't typically impact your books directly. For an operating lease, you're merely saying, I want to use this asset. What that means is that the risk concerning the ownership of that asset stays with us. The maintenance, management of that asset stays with us. For a finance lease, it stays with you. So the starting point will be, what kind of lease do you need? What do you desire? Now, depending on the kind of sector that you belong in, some sectors are very innovative intensive. That means that, for example, like manufacturing, that means that the equipment, the machines needed, they would quickly change in line with innovation in that space. So to ensure that you are constantly at the cutting edge of competition, if you operate in that space, you would need to opt for an operating lease, such that you would not be looking at acquiring assets, but usage of assets in a productive form that would ensure that your profitability is always achieved.
All right, and definitely, let's look at technology now and innovation. With rapid technological change, how does leasing help businesses stay competitive without being weighed down by obsolete equipment? And does leasing make it easier for companies to upgrade regularly if you're trying to upgrade that a little machine there to make it stronger or something more current?
Absolutely, it does. Now, Nigerians typically have this idea of wanting to own assets. So a person will go out there, he doesn't want to lease a vehicle, he wants to own it.
Yeah, you feel more secure when you own it, right?
Sorry?
You feel more secure when you own it.
Absolutely. They feel insecure. However, when you're running a business, a productive business, you also need to be careful with your capital, particularly when you are young, you are small, and you are scaling up. The wise choice around running your business is avoiding putting a lot of investment in capital intensive equipment and stuff like that. So at the end, so really it would be a better model for you to go, particularly in the IT space. IT is extremely fast. The innovation circles are so short that it's mind-blowing. It doesn't make sense for you to put in a lot of your investment in a lot of equipment that would stay for, because really it will become outdated. Servers, equipment, machines to keep at the cutting edge. And by the time you actually go in and buy through a finance lease, those kind of assets, it ties down your capital. Now, what that means is that you are back to another lender to borrow working capital to run your business. Because don't forget, an equipment itself does not pay facility back. The equipment is there, but you still need funds to power it to pay facility back. It's akin to somebody, let's say now with our electricity supply, and you say you want to use light from the mains. That works. But you might decide that you want to go green. The world has gone cleaner, cleaner energy. Nigeria has been in the space of the year of gas for a while. And you say you want to buy, let's say, you want to power your energy in your office through, let's say, gas turbines or even a gas generator. Now, the cost of installing those equipment, buying those equipment, it's huge. And that's a sunken cost. But once you get past that cost, you would earn the benefits of it. Now, the question is, are you big enough to have that capital to sink it in to that initial investment? It might not be very practical, particularly if you want to scale up. And businesses also need to be careful, particularly in the IT and the innovation space, to avoid holding on to assets that they can't do much with. Because when you need to sell those assets, if eventually you go through that, you get, let's say, a finance lease, and then you eventually own those assets. The challenge with holding those assets is, do we have a ripe second-hand market to sell those assets in the country? At the end of the day, you would lose a lot of money trying to sell them off, particularly because the depreciation would have hit it very badly. and it'll be seriously discounted. So leasing is the best solution for a technology or innovation intense segment like IT.
And does it help, talking about, going green at this point, does it help businesses, go green? Keep talking about ESG at this point.
Absolutely. The federal government has been clear on the fact that, ESG is closely linked to climate, also even like EV vehicles, CNG, gas, it's all, the environmental sustainability, it's very critical. And the truth is, that's also a fast-moving space. It's also a green space because we really haven't done a lot in Nigeria in that space. And that's why the government has given a lot of concessions. If one is bringing in equipment, machinery in, that's like, let's say it's gas linked, CNG linked, EV, that's electric vehicle linked, it largely in that ESG space. And the wisest thing to do actually is to lease those equipment. Why? Because technology is moving very quickly. Electric vehicles are new, CNG powered vehicles are new, at least in Nigeria and even in the world. So even as modernization happens, innovation happens in that space, it's smarter not to invest your funds totally in that space. It's best to lease it so that when you are done using those kind of equipment, assets, you can let them out. However, that's for spaces that are very fast moving. If you operate in an industry or a segment where the turnover or the turnaround of your equipment is not that high, it's smarter for you to actually get a finance lease. Because that way, at the end of the tenure, you actually keep your assets. And that also helps also, so that's also the flip side of ESG. Because there will be a reduction in over-circulation of these assets, the assets' lifespan will become longer by keeping them on, then it's better for you to actually keep on those assets. What that means is you'll be done with that lease. You would not have to pay again for any other lease. The asset is yours and you can keep it on. So what's critical is what sector are you playing in and how does the lease align with your needs? And that's where LECON comes in. Because we provide bespoke offerings, it's not a one cap fits all. What that means is we would work with you, we would understand your space, what you need to get done, and provide a kind of lease that would typically help and drive your business and move it forward. We have 6 focal areas that we largely are focused on, and that's agro-processing and food, mining and solid minerals, climate change, that's renewable energy, gender, which is a very big piece for us, healthcare and petrochemicals, telecoms and ICT. And on the gender level, I should also mention that supporting women isn't just a social goal, it's actually smart economics. That's the truth. We provide a level playing ground for women businesses. That's businesses that are either owned by women or are run by women. It's one of our 6 focal areas. I should also mention agro and food processing. The agri sector is the largest employer of labor in the country, and it's largely manual, it's not mechanized. And that's largely because the farmers are not aware of what a lease can do for them, the opportunities inherent in getting a lease. Most of them are largely unstructured, they're largely uneducated. So even if you ask them for financials or evidence of what they've done, they really don't have that information. What we do, apart from providing leads, we also provide some capacity building. So we handhold them, we help structure them so that we point them in the right direction to help them grow. Right. For us, it's critical. We're not focused on just profitability, but also impact. Impact concerning ensuring that the businesses scale up, that there's job creation, and there's largely sustainability.
Fantastic. I guess, definitely we're gunning for positive, externalities, not just profits at this point. Well, thank you so much. A lot to unpack there, and definitely I wish you the very best in your endeavors there. Thank you so much for joining us. Ebehi Moike is the Managing Director, CEO, LECON Finance Company. Thank you for coming on today.
Thank you very much for having me.
All right, and talking about empowerment at this point, let's see how those who have been struggling with foreign exchange have been able to be helped, at this point with another trend that's taking stage now, that's stable coins. That's taking center stage in global digital assets conversations, so far with Goldman Sachs dubbing this moment the summer of stable coins. Quite interesting one there. They said, following the passage, of the Genius Act that's in the U.S., definitely that's made a watershed moment for this sector. The big question now is whether this surge marks a lasting turning point or just another hype cycle that could fade as quickly as it rose. At the same time, emerging markets are proving to be the real testing ground where stable coins and driving remittances, cross-border trade and financial inclusion. Now we're going to explore the sustainability of this momentum and unpack new insights from State of Stable Coins in Emerging Markets reports there by Yellow Card. Joining us for this conversation, we have Lasbury Ludimish, the Vice President, Global Operations, Yellow Card Financials, and Managing Director, Yellow Card Nigeria. Joining me right here in the studio. It's great to have you. Good morning.
Thank you so much, Ladi. It's always a pleasure to be here.
Fantastic. And I love to talk about stable coins at this point, because stable coins are, well, to some people, some people, it's a huge deal, at this point, being able to send value for a very affordable amount. Sometimes you can send huge money for like $1. That's the cost of sending $1 million. That's possible. We've seen that happen with stable coins, definitely. So we see Goldman Sachs there. They're really optimistic, about what's playing out, so far, especially with the Genius Act. Tell me about how you're seeing, all of that play out.
Thank you so much, Ladi. It's actually an interesting topic. We're always excited to jump into it. So with the passage of the Genius Act, we have actually seen so many interests from the regulators and also from organizations, big institutions. A good example is Walmart. Walmart is actually trying to do their own stable coin. And also when you think about financial institutions, what they are doing, the likes of Citigroup, JP Morgan's, everyone is jumping into this ecosystem. They are all trying to have a stablecoin strategy, right? Because nobody wants to be left behind. And the passage of the Genius Act actually gives us some level of sense of security, especially to organizations that are heavily regulated and want to come into the space. And what we have seen so far with the report we published recently is that people are using the stable coins not as some sort of speculative asset, right? They are using it to make transactions. They are using it to solve real-time problems, right? And if you look at the economies around the world, the African continent, even the emerging markets, we can see some similarities what is happening. Most of those markets, they actually have issues with FX liquidity. Some do have issues even making cross-border payments because of the cost implications. And if you look at markets like the Latin American region, they have similar issues just like the African region, where we have so many of our brothers out there trying to send money back, and they are encountering heavy costs and also delays. So stablecoin has actually come in, right?
I'm trying to imagine your first stories where you're trying to send maybe $200 back home.
Exactly.
And that costs you what,
about 60?
Maybe half of that.
Exactly.
To send that home.
Exactly. So that is what we have seen people use stablecoin for. Like I said before, they are using it to solve real-time value. And you talked about the hype, right? What happens after the hype?
Right.
I think in my view, we will definitely see growth. We'll keep seeing continued growth in this ecosystem. And the reason being that those problems are still there. Those problems are not being solved by the traditional financial services, right? So because of that loophole, stablecoin is needed. The demand for stablecoin is actually high, right? So even after the hype stage, we're still going to see adoption. And this adoption, you can see with the passage of the Genius Act, we now have regulators that are interested in this ecosystem because these transactions are happening in those markets. businesses are using it, individuals are using it, and for them to ensure that they also raise tax from that whole transaction, there has to be some sort of regulation. So even before the passage of the Genius Act, we see some markets that are building up their regulations within the African continent, outside the African continent, all over the emerging market. Some do have regulations, some do have some sort of framework that looks like sandbox, right? Just to understand how the transaction works, just to understand what is even there for us to regulate, right? In terms of taxes, how do we charge taxes? How do we levy taxes, and how do we even collect it? So regulators are interested. The interest is increasing as the day goes by, right? Everyone wants to jump into this this ecosystem. And if you also look at the institutional scene, you can see institutional adoption. We have institutions trying to create their own stablecoin strategy. We have institutions trying to build their own stablecoin, right? They don't want to go with the traditional stablecoin or the famous one in the market at the moment. But you see banks, big banks like Citigroup, JP Morgan, they want to create their own stablecoin, if not for anything, for their treasury internally.
Right, because I remember, when, Bitcoin was created, if you look at that white paper, and definitely they say Satoshi Nakamoto created Bitcoin. We don't know who that is.
Exactly.
But I guess he was trying to take out the middlemen, more like the banks, from transactions. But we're seeing the banks adopt stable coins. I don't know if Satoshi is happy with stable coins, at this point, but the banks are coming in.
Exactly. You know what? The banks will come in, not just the commercial banks, even the financial services, the other financial service providers. You know why? Because if they don't come into this ecosystem, they'll be left behind, right? So you imagine funds moving around and your bank is not having a piece of it. So this is the main reason why the banks want to be part of this whole ecosystem, right? You see funds moving around. Last year, stablecoin transaction in Nigeria alone hit about $22 billion, right?
$22 billion.
$22 billion
in Nigeria.
In Nigeria alone. And as of last year, 2024, the total stablecoin transaction was about $15.6 trillion. Right? You can imagine having these transactions outside the banking system. So the question is, who are those making these transactions? They are bank customers. So why are they not making these transactions through the banks? That's the question the banks are asking. And they can't help it. The only thing they can do is to jump into this ecosystem. We see banks all over the world creating their own strategy, even locally. We see banks coming to us to say, we're interested, what is even happening here? Okay, how can we be part of this, right? Nobody wants to be left behind.
Right.
And if you see Bank A jumps into it, probably have a product, have a solution that is built on the blockchain, built on the stablecoin, Bank B's customer will definitely move to Bank A, right? So for the banks that are not jumping into it, for the financial service providers they're not coming into this ecosystem, they're bound to lose their customers. So everyone still wants to keep their customer base. Not just keeping their customer base, they also want to grow their customer base. So everyone is interested. And the only thing that would help grow this system, right? The only thing that will still help drive adoption in this ecosystem is regulation. Regulation is key, right? And we can see how the United States has taken it up, right? And everyone is following suit. For those that never considered it, for those that never thought, oh, we're interested, for those that even put up some regulatory directive or some policy statement saying, we don't know what is happening here. If you're dealing with them, you're at your own risk. They are coming to learn about this ecosystem, and they're trying to put in the right regulation to ensure that whoever plays in this space is playing in a safe environment, because consumer protection is key. For the regulators, their key mandate is to protect the economy and protect the consumers. So for them to do this, they need to even understand what the ecosystem is all about, and they will then build in the right framework, not just to protect the interest of the consumers, but also to grow the economy, because we can actually grow the economy by having the right regulation, putting in the right framework to ensure that this business grows, this ecosystem grows.
Fantastic. Well, we'll keep watching that growth. But, you know, your recent report, you did reel out some numbers about, you know, transactions and stable coins, you know, for Nigeria. What else is in that report?
Okay, the report generally, we looked at the emerging markets, not just Nigeria alone, right? The bigger picture, the continent, and outside the continent, what is happening in Latin America, what is happening in the Southeast Asia, what is happening in the Middle East, because we share some similarities when it comes to our economy, right? Most of these markets, they do have issues with FX liquidity.
But, sorry, it's not just poor countries jumping on stable coins.
No, not just poor countries, right? Not just poor countries. Because of, you can see some countries that are actually heavily dependent on foreign inflows, like remittance, they are also jumping on stablecoin, right? Because for you to make those transactions, you have to pay some fees. And if you have to make those transactions through stablecoins, it comes with a lower cost and it comes with speed, right? So not just all about FX shortage, not all about the currency volatility. There are other use cases. People are using this technology to even manage their treasury. Commercial banks, financial service providers are using this technology to manage their treasury internally. So not just about the poor countries. We're not poor in Nigeria, right?
No,
Nigeria
we're not poor.
Is not a poor country,
no, we
right?
are a rich
Exactly,
nation. Yes.
exactly. And as the giant of Africa too, you can see the numbers for Nigeria. So if you look at the report, what we have noticed is like some of the key things we have noticed. You can talk about regulation. You can also talk about the use cases, what people are using this technology for, right? You can also talk about the regulatory interest is on the increase, right? Most of the markets that had some policy statement talking about don't transact with this stable coin in this, with this technology, right? They are now trying to build in framework to ensure that they have the right regulation for this ecosystem. So the report unpacked a whole lot, from adoption to use cases, from use cases to regulatory interest in this whole thing, and also the institutional adoption. I think that one is key, right? We're not just looking at individuals adopting this technology, but we are looking at big businesses, big organizations adopting this technology, trying to build in some innovative products on this technology.
All right, you know, definitely, you know, some see some kind of intersection between, you know, stable coins and fintech. That's, you know, financial technology, because it's also technology.
Exactly.
You know, at this point, and, you know, it almost seems like these are very, very early days, you know, when it comes to this stable coin industry, and it seems everybody's still learning. Everybody's still trying to understand what's really going on, you know, here. So, you know, in your viewpoint, how are you seeing that intersection, and what are you seeing in the next, you know, 3 years, you know, for stable coins? And I don't know, for some reason, I keep imagining artificial intelligence and stable coins having some kind of play.
Okay, so if you talk about stablecoin and the fintech, right? I don't know if you're familiar with M-Pesa in the eastern part of Africa. When it came in, right, people kicked against it. Even the telecommunication sector kicked against it, right? So in my own view, I think there is no competition there, right? The fintech, the payment service providers.
Just like we said, there was no competition between fintechs and the banks.
Exactly, exactly. We all complement each other, right? We all complement each other in the right way, right? There are some things, there are some leg of the transaction that we can actually complete on our own, but we need the fintechs to do that. So I can say that we complement each other. The sky is big enough for everyone, and there is a piece for everyone, right? Then when it comes to what I see in the next 3 years, I see more economies developing their own framework, right? Just to ensure that this technology stays, right? And the economy gets the benefit of this technology. In 3 years, I also see heavy institutional adoption, right? I also see some big banks all over the world building their own stablecoin strategy, having their own personal stablecoins, right? And making some of the banking transactions with stablecoins, yeah? And I also see, like I said before, more clarity around regulation, because there are some people, there are some businesses, some sectors that have one or two innovative products to be built on this technology that are just sitting back watching what the regulators are saying. So for them to even come into the system, they need to have that regulatory clarity that they are even permitted to jump into this, right? So I see that regulatory clarity in 3 years' time. I see heavy institutional adoption in 3 years' time. I also see heavy adoption too, like I said, both by individual and also by businesses.
And maybe the guy on the streets too.
Exactly, exactly.
And I was hoping you're going to see, I also see a Laddie Williams backed stable coin at some point. Maybe we'll see that later, but thank you so much.
Thank you.
It was great having this conversation with you. Lasbury Ludimu, Vice President, Global Operations, Yellow Card Financial, and Managing Director, Yellow Card Nigeria.
Thank you so much, Laddie. Thank you. It's always a pleasure to be here.
Thank you so much.
Thank you.
All right, let's get a quick check on what's playing out in global space now. See the U.S. dollar traded largely on change today in volatile trading after U.S. President Donald Trump announced he had fired Fed Governor Lisa Cook in his latest assault on U.S. central bankers. That's U.S. central bank independence at this point. So the dollar index, which tracks the greenback against a basket of 6 other currencies, traded basically flat at about 98.32, recovering after falling as much as 0.4% and after Trump's announcement. This follows the U.S. currency registering its biggest daily gain of the month. That happened on Monday. Now we see Cathy Wood's ARC ETFs have reported their daily trades for Tuesday, August 26, 2025, with significant activity in biotech and tech stocks. The largest trade of the day was the purchase of 165,874 shares of CRISPR Therapeutics, valued at approximately $8.98 million through its ARC ETF. This acquisition is part of a growing trend, as ARC also bought shares of CRISPR Therapeutics earlier this week, indicating a bullish stance on the gene editing company. Then Apple Inc. Will hold its annual fall product launch on September 9th, where the company is expected to reveal the iPhone 17 lineup, featuring a new, significantly thinner version of its flagship device. The virtual event will begin at 10 a.m. and will be streamed online. The company's invitation includes the tagline, "Or dropping." All right, that's the show today, and definitely the markets are trading right now here. Hope you've gotten direction on where to stash cash. I'm Laddie Williams from me and the team right here at Channels HQ. It's bye for now.